This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. I have to read something from Seth Godin. I think this is great. And I put it on my blog, but it's the incessant search for the new thing. Today, an internet video or an investment philosophy or a political moment might last for weeks or even a few days. It's not unusual for a movie or a book or even a TV series to come and go before most people notice it. Neophilia has fundamentally changed the culture. The result is there's an increasing desire, almost a panic for something new. Yesterday was 1,000,000 years ago and tomorrow is already here. The rush for the new continues to increase and it's now surpassing our ability to satisfy it. When that need can't be filled, which is not surprising if you think about it, then we're inclined to declare that it's the end of new ideas, the end of progress, the end of everything that's interesting. Spend a week or two watching TED videos, and once you catch up, you might find yourself saying, sure, but what's new now? If you're in the business of making a new thing, the churn may be an opportunity because it's easier now than ever to send up a hit up the pop charts, whatever sort of pop you make. But it comes at a price, which is that it won't last, and you'll quickly have to go back and make another one. The real opportunity, I think, is in trying to build longer arcs. Now that the cycle of new is eating itself in a race to ever faster, there's a bigger chance to make a long-term change by consistently focusing on what works and what's important, not what's new and merely shiny. What's important, what's always important, is useful change. Great piece of writing from Mr. Seth Godin. The only constant is change. The flux in time, the change, the inflection from point to point. This is life. This is change. It's also the root of a subject that I like to talk about, a subject that I like to write about, trend following. A style of trading that when you really start to analyze it and look closely at it is as much about life is trading. Trend following is life. Life is trend following. I just finished an hour and a half of yoga, and I have to tell you, I'm in the most amazing bliss right now. I'm completely out of my mind. I might as well be gacked up on heroin, even though I've never done heroin. So I don't really have any experience with that. So all of you folks out there that are gacked up on heroin right now listening to a trend following broadcast by Michael Covel, well, you should probably stop doing heroin. But I have to tell you, that moment of bliss. So anyways, this really got me thinking though. It's the idea of the new thing. And there was a book years ago by Michael Lewis, I believe, called The New Thing. And it's this incessant search for something new. There's always going to be something shinier and prettier. And especially in the investment world, there's always the thing they're telling you that's coming. Whereas in the trend following world, if you have a philosophy that's grounded in change, a philosophy that is developed from the ground up to know that the world is not static, to know that the world ebbs and flows. You can participate when a market goes up. You can participate when a market goes down. You're not just blindly sitting there at the mercy of the latest new thing. The latest fear. And if you think about this new thing really too, really it's all about fear, right? People are just afraid. They're afraid. They're afraid they're going to miss something. All the years of research that I've done show very clearly what patience gets you. Sure, there will always be somebody who is lucky, who's ahead of the curve, maybe gets a little press, they win the lottery, so to speak. And that person will make large groups of people believe that I too can be just like them. I too can be the next home run hitter. I don't have to really work hard. I don't really have to practice. I don't have to do any of that stuff. I'm just going to get lucky and win the lottery. But let me tell you how it really works. And this is a great piece of writing from Michael Covel, who was on my podcast recently, who you should definitely listen to. Focus on process, not outcome. If you want to become a world class as a violinist or a chess player, areas where little luck is involved, you need roughly 10,000 hours of deliberate practice. What's crucial is that your results as you improve will be a reliable indicator of your skill. As a result, feedback in these domains can be clear and unequivocal. If you compete in a field where luck plays a role, you should focus more on the process of how you make the decisions and rely less on the short-term outcomes. The reason is that luck breaks the direct link between skill and results. You can be skillful and have a poor outcome, and unskillful and have a good outcome. Think about that. You can be skillful and have a poor outcome, and unskillful and have a good outcome. Think of playing blackjack at a casino. Basic strategy says that you should stand, not ask for a hit if you're dealt a 17. That's the proper process, and ensures that you'll do the best over the long haul. But if you ask for a hit and the dealer flips a 4, you'll have won the hand despite a poor process. The point is, the outcome didn't reveal the skill of the player, only the process did. So focus on the process. And Mobison goes on to say, continuing here, one final thought. Once you've embraced the paradox of skill and you see that it's appropriate to have an attitude of equanimity toward luck, if you've done everything you can to put yourself in a position to succeed, you should accept whatever results appear. Some days you'll be lucky and results will exceed your expectations. Some days the results will be disappointing because of bad luck. The best plan will be to pick yourself up, dust yourself off, and get ready to do it again tomorrow. Right? Process versus outcome. So I've had some people come to me recently and they say, well, there's been a negative month in trend following. And it's like, right. Okay. Have you looked at any of my books? Have you looked at the performance data in the books? Have you looked at the month-by-month charts going back decades? And can you point to any month-by-month chart of a trend-following trader that shows positive performance every month? Can you show me any of those? So do you really sit around like with some kind of glee or joy on your face and be like, oh, that trend following guy, Covel, look, there's a negative month of performance. I'm going to have to write him and say something, and I'm going to win now. I'm going to win. I'm going to win. I'm going to prove him wrong. I'm going to prove trend following wrong. There's a negative performance month. It's all over. They're all about to go into 100% drawdown. It will be all over. The trading strategy that has lasted well over 50 years is now all of a sudden dead because there's a down month. Well, that's interesting. I don't really know what to do with it, but I'm going to add some more stuff. This is great. This adds into a more specific explanation of trend following that I saw. And yes, if this feels a little eclectic, deal with it, but it's more interesting than the other nonsense that you can listen to if you pull on Bloomberg right now. A bunch of talking heads that are paid to read you stuff that sounds like corporate gobbledygook that was written by a bunch of journalism majors that are 3 years out of college at Yale. Bingo. I'm sorry, I just don't have that skill set. I can work at it, maybe I'll get it, and one day I will be proficient enough. As of right now, you just get slightly crazy. Here you go. 99% of trading or investing, for that matter, and this comes from PFP Wealth Management. It's a great piece of writing. 99% of trading or investing, for that matter, involves people with an inflated sense of self-worth staring at Bloomberg terminals. Ooh, imagine that. Attempting to predict the unpredictable. Boy, what a great sentence. I think Tim Price wrote that. Great line, Tim. 99% of trading or investing, for that matter, involves people with an inflated sense of self-worth staring at Bloomberg terminals, attempting to predict the unpredictable. Trend following represents the 1% that's different. Systematic trend followers don't attempt to predict anything. Instead, they respond to the one aspect of financial markets that is entirely not subjective: the price. One can debate whether the U.S. economy will fall off the imminent fiscal cliff or not, and what the damage might be if it does. But trend followers don't care. They respond to entirely objective aspects of financial market trading, namely the price evolution of whatever it is they happen to be trading. Technical analysis, the study of price charts, is often viewed as something of a black art by traders. But investors looking for an edge are more likely, we suspect, to keep an open mind. Use whatever works, and trend following, we would humbly submit, works. Now, I do have to take, before I read a little bit more here from this piece from PFP Wealth Management, when you talk about price charts, reading price charts, studying price charts, trend followers don't do that. It's literally the price. So if you're sitting around right now with a bunch of price charts and you're studying them, maybe if it's some kind of back test process and you're trying to figure out something with your system, fine. But this isn't about studying price charts. It's about price action taking a certain movement, a certain direction, a certain trend, and having your rules for entry, exit, bet size along the way. It's not, hocus pocus. And I don't necessarily think Tim Price was trying to say that, but I just want to clarify that. Continuing, and this is once again from PFP Wealth Management. Continuing. So what exactly do trend followers do? As the name implies, they follow trends. Whereas most fund managers are trying to forecast markets, which we would suggest is inherently impossible over meaningful time frames, trend followers merely adapt to them. An economist at the Bank of England, Andy Haldane, has conducted a simple experiment that gets across the essence of trend following. And imagine an investment strategy in U.S. stocks based entirely on the past direction of the stock market. If the stock market rises during the prior period, the strategy buys stocks for the next period. If the market falls during the prior period, the strategy sells. The strategy simply extrapolates the most recent market trend. If you had started this process in 1880 with $1, shifting in and out of the stock market in response to the market's prevailing trend, you would now have over $50,000. Alternatively, you could have pursued a crude value strategy instead. This strategy assesses whether the market is undervalued or overvalued and buys only when the value gives a positive signal. The criteria for assessing value is Robert Shiller's dividend and discount model. We like Shiller, but this crude value strategy is not particularly compelling in Haldane's experiment. If you had started in 1880 with $1, you would now have 11 cents. But focusing on the stock market in isolation is missing the point. Trend followers, unlike most fund managers, are not myopically focused on the stock market to the exclusion of all other financial assets. They scour other markets for trends too. Interest rates, currencies, commodities, metals. And unlike most fund managers, they are just content to sell the market as they are to buy it, which is why the correlation of most trend following funds to traditional markets like those for stocks and bonds is more or less zero. Well, there you go. That's a great explanation. So you think about what Seth Godin was talking about, the look for the shiny new thing that's always appearing. There must be, always have a shiny new thing. Well, that's obviously completely nonsense. If you are into propaganda and whatnot, and then you will always see the new thing. And I've said this in my podcast many times. Walmart will always have some type of injection molded plastic device, something or another that you can buy and take home, and you'll have the new thing. So clearly, don't listen to the new thing stuff. Just stop. And the piece that I read from Michael Mauboussin, it correctly points out that you need a process. It's not going to always have you winning, because it's kind of impossible to win all the time. It just doesn't work. Doesn't work. You can't win every time, okay? And then the last piece that I read from PFP Wealth Management really gets at a nice, simple way of understanding trend following. And the idea that you could make money off multiple markets, currencies, bonds, metals, and you're not just fixated, like some kind of crazy person in a straitjacket only on stocks, only on the Dow index, S&P, is a huge advantage for you. If you would like to make money. I sometimes think to myself, what are my influences? What drives me? What makes me wake up each day? What grounds me? I think my point is that classic excerpt from the Pixies song Debaser has nothing to do with trend following any more than sitting at a Bloomberg terminal has to do with trend following. You see my point? Literally, that excerpt from that classic Pixies song is as relevant to your trading as turning on Bloomberg right now, turning on CNBC right now. And you could take anything and substitute it for the Pixies song. You could take an episode of Californication. You could take an episode of you name it, Pawn Stars, whatever, and you could play them side by side, right? So here's Pawn Stars playing on the left, and here's Bloomberg on the right. I challenge you that I actually think you're going to have a hard time with your financial success in life until you can come to realize that they both give the exact same informational content for your investing decisions. Pawn Stars on the left, CNBC on the right. The Pixies song Debaser on the left, Bloomberg on the right. They each give the exact same amount of useful content for your investing decision making. There's no difference. Now, some of you might be sitting out there and saying, this guy doesn't sound like he's really attached to reality. Some of you are sitting out there laughing because you realize exactly where I'm going with this, and that you realize most people are kind of like, what is he talking about? The point is neither of them are useful. It's not useful. Fiscal cliff debates, not useful. Elections, not useful. Look, it's you against the system, you against the man. It's you trying to win. You need a strategy where you can excel, where you can make money in unending change. How are you going to do that? I humbly submit, after 5 books, a film, more blog posts than I can count, a bunch of tweets, and a few Facebook posts here and there, that trend following is a fantastic option. And if you have any questions at all, drop me an email. I'm real easy to reach. Mike, M-I-K-E, at Covel.com, Covel.com. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.